Hello and good morning, everyone. First of all, welcome and thank you again for joining this webinar. We are streaming live from Percetakan Nasional Malaysia Berhad's multipurpose hall here in Jalan Chan Saulin, Kuala Lumpur, Malaysia. My name is Adi Narayan and I'm the Director of Sales, Technology and Smart Card here at PNMB. I will be the MC and moderator for today's webinar. Before we begin, I'd like to take a moment of your time to do some housekeeping. For your information, this is a 2-hour webinar. Should you have any questions for the speakers throughout this webinar, please post them in the Q&A section on Zoom. The questions will be addressed during the Q&A session. If there are any unanswered questions by the end of this webinar, those questions will be replied through the email you have registered with. We'd appreciate if you could take a few minutes of your time after the webinar to fill up the feedback form and send us your business cards via our official webinar WhatsApp, which is the same WhatsApp number you received the event reminder from. 20 early bird submissions will receive a complimentary GrabFood voucher as a token of appreciation. Now then, let's go through today's agenda. To begin, we'll have a 45-minute presentation on the evolution and innovation of card technology and security, presented by our speakers, followed by a 45-minute panel discussion on the webinar topic theme, which is card trends in 5 years. Is it heading towards a sunset business? And last but not least, we'll have a 20-minute Q&A session where our panel speakers will attempt to answer most of your questions. So with that, I'm happy to introduce Percetakan Nasional Malaysia Berhad, or PNMB for short, as the sponsor and organizer of this webinar. PNMB has over 130 years of history being an innovative, secure printing solutions provider. So let's get to know PNMB a little better through its corporate video.
What is printing to you? Some tell stories. Some have even written history. While some open up possibilities. Whatever people want to etch on their pages, PNMB has made it all happen for over 130 years. And what a journey it's been. But for us, this isn't a history to simply look back on. It's a history that has shaped relentless innovation. Innovation that has redefined secured printing both on the page and off it. Right in this moment, through innovation and technology, PNMB is taking a wider, more purposeful definition of printing to cater for the future. Whether it's pushing the boundaries of printing across a wide range of physical mediums, or imprinting data in the digital sphere, we've been Malaysia's leading secured printing partner. But as far as we're concerned, our quest to keep going beyond is far from over. You see, our pursuit doesn't stem from a sense of duty. It's driven by a genuine desire to make a difference for our clients and partners. A desire that's imprinted in the hearts of every single person across our value chain. This is what boundless innovation looks like for us. And this is what we've set our hearts to do. Today, tomorrow, and beyond.
Thank you everyone for your kind attention. I believe the PNMB corporate video has given you enough understanding of what PNMB is all about. So without further ado, let's begin this webinar with our first agenda, which is our keynote, the evolution and innovation of card technology and security. So first up, we have Mr. Junaidi, who is our head of Smart Card division from PNMB. Mr. Junaidi has been in the enterprise ICT business over 20 years, though he doesn't look like it lah kan. So he has been with PNMB since 2007, applying his vast experiences in managing PNMB Smart Card division. So Mr. Junaidi, floor is yours.
Okay, thank you Mr. Adi for a very nice introduction. It's been a long time since actually we have this style session. My role today is actually, first of all, we want to talk about Smart Card. But at the same time, we wanted to also introduce PNMB as one of the manufacturing facilities in Malaysia that can actually offer a lot of services. So let's start off with my first slide. Now, we talk about future work trends for the next 5 to 10 years. Now, you look at all the bullet points that I have there: zero trust security, cloud first transformation, work from almost anywhere, modern workplace, technology consolidation, service transformation. Now, at every single point of this, there are some kind of smart card elements in it. So, how do you look into security? How do you have access card? How do you do your payment transactions? You know, how do you actually move things back to cloud? Now, the most important part in smart card industry now is actually the one that can make it to be relevant in the next 5 to 10 years are innovations. All right, so that's where we're coming from. Now, for the benefits of anybody who actually not really sure what smart card is all about, it's a very the keyword is actually an intelligent card. It is actually a card that actually have a chip with memory, with data in it. And one of the most important part is actually majority of the smart card have at least a minimum of 2-factor authentication that allows you to actually do a lot of transactions and services. That allows you to have trust with each other. The readers, the infrastructures, the whatever transaction that you need to do, you want to know who do it at what point. Okay, so those are the things that I think the bankers going to agree with me. If you don't know who's actually doing something, then you know there's something wrong, right? So let's look at the growth. If you actually serve the net, the internet for the past back years, most of the studies were looking at the revenue growth. It's actually really huge. We're talking about anything above 4, 5 to 6% growth in terms of revenue for smart card. But again, these are all pre-COVID studies. The data actually comes from before the pandemic actually hits. Now, interesting to know what the data into 2020 and 2021 that actually transpire for the next 5 years. So that's where we want to look into things that we're going to discuss today maybe. So one of it is actually cashless payments, right? EID, electronic identification and passport. We're talking about border controls. We're talking about how to fallback plan. Whether smart card is something that you can do away without, or even you don't need any passport anymore. Transit cards. Now this is a very transit cards is for transportation. Now this is a very important aspect, because why transit cards now is still very much relevant is because of the speed. There's no way any QR codes or whatever can actually fight at the moment. But then again, in the next 5-10 years, you don't know what's going to happen. Now you look into blockchain and AI. This is a very big word, and it's already have inside the industry that some of the chip industry already look into blockchain, already look into cryptocurrency authentication. They actually use smart cards as part of the physical authentication need to be done. So then, last but not least, integrated biometrics. Okay, so we will discuss some of these components. But to me, as far as manufacturer is concerned, we think that smart card will be there for the next 5 years. And why? Because it is ease of use, because of its speeds, because of its versatility, right? And then these are the ones that actually going to continue to the growth. Now, if you talk about the leap of technology over time, how the customer are paying, from swipe magnetic, right? From magnetic swipe all the way to the chip card, it takes a very long time for even it to evolve. Because of the maybe the application development, because of the applets. But then from chip card to tap, and from tap to mobile wallet, it becomes shorter and shorter. And I guess chip cards, contact cards, tap, which is the wireless contactless, and also the mobile wallet, these are the ones that actually will coexist for the next 5 years. How do they coexist? Probably the level of authentication is required. So again, we will probably get some insight from our bankers, Mr. Fazrul later on, talk about how banks look at it, in the future, how fintech environment will actually cover that. Now, a little bit of marketing, a little bit of support on what a local manufacturer like Pencetakan Nasional Malaysia Berhad. Our manufacturing capabilities, we are actually has been around for 130 over years, but our smart card factories only start production in 2017 and until now. But I'm proud to say within these next 3 years, for the past 3 years, we have managed to become one of the only EMV manufacturing and also personalization center in Malaysia. And hopefully it will be some kind of a boost for us to make sure that we can be one of the big players in the smart card industry. Now, of course, our products are plastic cards, magnetic stripe cards, contactless cards, contact smart cards, and also dual interface. The reason why I put the dual interface very big there, because that's where the future is going. There's a lot of dual interface smart card, which is most of the banking are using now, and also contactless smart card is which is one of the one that covers a lot of market now, especially when you use touch and goes, and then when you use all those kind of contactless payment system, right? Okay, so I got a warning from the timing just now. So a little bit about facility certification. Okay, we are also CJSOs. We are Intergraph certified F level, and we are going into the governmental certification within this next 1 or 2 years. Visa Master, Europay certified, and PCI. Again, I just want to say that cyber security and data protection is one of the things that we are looking into, and we are going to make sure that we are actually, going towards on a fast forward directions. Now, being a 130 years company, we are very much into a lot of security printing technologies. So we actually equip our team with all the facilities, and also we can design a very, very high security and also structured security design together with even passports. We are also going into those components. So this is something that we want to offer a little bit of insight. Now the next thing is actually we are doing a lot of banking cards. Okay, so now all the banking cards are very fancy. If the banking card not so nice, people just don't want to bring it around. But I think majority now they got gold colors. They are using a special effects. Even transit cards now, very colorful. Membership cards, they actually goes into those type of design. So we actually pushing our team to go into the next level to make sure that we can fulfill most of these requirements from the customers. So one word for this particular slide is actually we are also a solution provider. Okay, PNMB as Secure ID is our solution that covers the secure identity lifecycle ecosystem, right? Meaning to say that we actually have a full solution that covers from the enrollment component all the way to the card management lifecycle. That actually already been deployed few times, right? Few customers. We have about 3 or 4 major customers here in Malaysia, and also we have 1 or 2 customers outside Malaysia, and already been installed and implemented. Now, our core implementation is actually going into facial card matching, okay, through your smart card, biometric card matching through your smart card, and also QR code validation. So these are one of the key features that we actually have, and hopefully we will become one of the good provider for even Malaysia and also international. And again, to note, that's my last slide. But in summary, I would say that in PNMB right now at the Smart Card Solution Division, we are actually ready to to drive the market for the next 5 to 10 years. Thank you very much.
Thank you. Thank you, Mr. Junaidi. So our second for today, Mr. Fazrul Imran, who's actually the head of card operations at MBSB Bank Berhad. So Mr. Fazrul brings to the table his 15 years of banking experiences. So as the head of card operations, he manages all matters regarding MBSB Bank's card offerings, and he has been a pivotal player in implementing the MBSB Bank debit card program in 2017. Yes. Over to you, Mr. Fazrul.
Okay, thank you. Okay, thank you, Ed, and thank you, Encik Junaidi, on the good presentation on percetakan. Okay, today I will talk about the evolution of card during the years, especially for specifically for banks. Okay, go to my slide. In the beginning, in 1951, Diners Club, which is a charge card, started issuing a cardboard card. So if you look back at the years, you look back at your card, it started out from a cardboard then it became a plastic card right now with a lot of sophisticated features. So you can look at my slide how the card looks back, I think about 60 years ago. So it's quite a simple card. So the details that it has is only the name and when the card expires. So it's quite different from what the card you see right now, which has chip, which has magstripe. It's a lot more complicated than what we used to have in 60 years ago. So when they started issuing this card, so the take-up rate was quite good also. Then as the acceptance grows, merchants started accepting the card. So the banks and card issuers started to look at, okay, how do we evolve our card payment? So it started in 1970s. It started that plastic cards started coming up with magstripe. So magstripe is evolvement. It evolved from the cardboard card. So it contains the magstripe. It has the card data inside the magstripe. So basically, the magstripe has card number, card expiry date, and all the details are inside the magstripe. So in 1970, the first card issuer to issue the card was American Express in America, which you can see in my slide. So the magstripe is at the back of the card, and it contains the static data such as card number and expiry date. Customers are issued with this card, so customer can use this card at merchants all over the world. So the acceptance from 1970 onwards for the card, it showed up because worldwide the card industry because the card industry growing. So the acceptance rate of card started growing and began. Of course, the transaction exploded basically. Yeah, right. Sorry for that.
No worries.
Okay. After magstripe, it evolved into a chip card. So the evolution of the chip card. Right. Okay. When it started out, when banks are issuing magstripe, the issue with magstripe was the fraud that banks card issuers encountered, because the magstripe data is static, so it's very easy to clone. So the issue is fraudsters are able to skim the cards, especially the magstripe. Okay. So from all the data which they are able to skim from the card, fraudsters are able to clone the card and use it anywhere in the world. I can share with you an example which I had at my previous bank. It was a magnetic transaction, ATM withdrawal at Bali. The customer is in Bali.
Right. Indonesia.
So, Indonesia, correct.
Right.
They were using that card at Bali. At the same time, about maybe a difference of 1 minute, there was another transaction in Belgium.
Belgium.
Yeah.
Wow.
So obviously the customer card was clued.
Okay.
So so the banks need something which is more secure than the magnetic stripe. So
This was in the 70s or 80s?
actually, sorry.
This was in the 70s, 80s?
Actually, this happened
90s?
5 years ago.
5 years ago?
Yeah, correct.
Wow. Okay.
Because let me share with the panels. Even though we are accepting chip cards, there are places where ATM
Right.
cards are still reading magnetic stripe.
Okay.
Especially since Indonesia has no liability shift yet. It's not implemented yet in Indonesia. So there are ATM acquirers in Indonesia which still accept magnetic stripe. So we found out that the card was closed somewhere in Indonesia when the customer went there. So the fraudster was in Bali
Okay.
and they were using the card there.
I see.
To do some ATM withdrawals.
I see.
Yes, correct.
I see.
So the issues are looking at other secure way how to issue cards. So it evolved into a chip card, which we see right now.
Right.
And you can talking about the fraud, you can see at my slides that how the schema looks like at the ATM.
Right.
Normally the card is schemed normally at ATMs, especially.
I see.
That's the most favorite place where fraudster would put the schema. Okay, let me show you from the chip card. Let me speak into the Malaysia context. We started to issue chip cards back in, I believe, in 2005, completing recording in 2006.
Okay.
So, from the graph that you see from my slide, you can see the fraud incident which happened when we introduced the chip card. It reduced dramatically.
Right.
Correct. Okay. This is the Bangalore slide. So, with the chip card, we are able to reduce the fraud, and looking at business, they are more with the lower fraud rates. Business are more able to aggressively market cards. So for me, the golden period of cards was in 2007 onwards,
Right.
where banks are aggressively issuing cards.
Right.
If you can recall, banks are issuing gold, platinum,
Yes.
especially platinum cards in back in
Right.
2007 because actually banks earned back then before payment card reform framework. I can talk about this later. And if you have any question,
Yes.
they control the interchange rate. So with the platinum card, banks earn more MDR when they issue the
Merchant discount rate.
Merchant discount rate, you're correct. Yeah. And this is the golden period before PCRF was introduced back in 2015 to control the interchange rates, what banks earn. Okay. Also talking about the security feature of the card, the chip card now contains dynamic data instead of static, so it's very difficult to clue the cards. So fraudsters are now, just sorry with you guys, fraudster now is migrating from cloning the card into a more traditional way of fraud, which is social engineering the customers to within the card data so they can use it online or in instances of, let's say, just sharing with another industry which is internet banking, for customers to reveal the OTP so that the fraudster can use it to transfer the amount from the customer to a mail account.
I see.
And so on lah.
I see.
Okay. Then from chip card it evolved to chip and pin. So just let me because I already got a warning. Okay, chip and pin. Chip and pin was introduced in Malaysia in 2016.
Yes.
In 2016. Okay, I got a warning 1 minute. Okay, within chip and pin, is customer no longer sign at at the safe slip, customer are required to enter their 6-digit PIN. So the banks are began recording the cards in 2016 and completed SSL by end of 2016, and some might take longer than that. So we are worried during this period where the customers are whether they accept keying PIN the port. But surprisingly, customers are able to adapt keying the PIN at POS upon the self-terminal. So just let me show you how the card looks now. So this is basically how a card looks like now. So it's quite different from the cardboard card, which is which was introduced 60 years ago, and a lot more complicated. Okay, that's the end of my slide. So
Okay.
back to you.
All right. Thank you very much, Mr. Fazrul, for your insights. I think you've raised a lot of interest there, which I think can save it for the panel or even a Q&A session later on. Thank you. Thank you. Can I have the pin, please? All right. Okay. So, moving on to our third speaker, Mr. Tang Mun Wai. So, Mr. Tang is the head of FinTech at Malaysia Digital Economic Corporation Sdn Bhd, or MDEC for short. So he has been with MDEC for the past 17 years, right? Just similar to Junaidi, you don't look like 17 years kind of situation. Probably. So the latest 5 years as the head of FinTech. Yeah. So you've been instrumental in facilitating the development of the dynamic FinTech ecosystem of Malaysia. So, Mr. Tang, if you please.
Okay, thank you, Ati. Thank you to the panels. So, I'm here to talk about the evolution of fintech ecosystem in Malaysia. Okay, let me just go through some of the slides. So, 5 years back, when we all start talking about fintech, we sat down together with the regulators, set up with some of the big banks, ABM, Association Banks of Malaysia. And at that time, Singapore was buzzing with fintech, They're throwing so much money around, to say we are the top, but Malaysia, if you want to do fintech, you want to be the emerging ecosystem fintech in Malaysia, what are the standpoints that we can do? What are the key core things that we can develop on? So we sat down, we came up with 2 ideas. First one was fintech for Islamic banking and finance. As you know, we are still ranked number 1 for Islamic finance, but not fintech yet. Okay, so we're still ranked number 1, no joke about it. But you'll be surprised that in some of the finance, Islamic finance, right, Dublin is ranked number 3rd or number 4th. So a lot of countries are coming up. These are not even foreign countries, So the second one is for fintech for developing economy. As you know, Malaysia's right now GDP is of 4 to 5% on a yearly basis. And this make it, with the 32 million population, it makes it the right ground to breed more fintech startups, and that's really for the economy itself. So this is Malaysia as a glance. We have close to some of the transactions, you can see all those there. We have about 95% banking population, first 96 right now. Bank population is very high. We have close to, but what is interesting about these figures is Malaysia, we are champion when it comes to social network. Seriously, we are. Facebook, if you take away China, Malaysia is the biggest one in the world.
Oh, really?
Seriously. And I wouldn't mind saying, I mean, you look at Facebook itself, probably 30-40% is all political related at this moment.
Yeah.
And TikTok, everyone has a TikTok, everyone uses a TikTok, Instagram, LinkedIn. We are really good when it comes to going social network. So that shows that we are quite digitally infused into the economy when it comes to digital economy. Okay? And this is just a snapshot of the fintech ecosystem in Malaysia. You look at it, a big chunk of it is in payment. All right? We have close to about 240, 250 fintech companies. Some of them are local, some of them are foreign. And some of the big things that's coming out right now is about, of course, everyone's talking about cryptocurrencies, everyone's talking about wealth tech, AI, those are some of the infrastructure, some of the, we call it the soft infrastructure that's supporting the growth of fintech ecosystem in Malaysia. So fintech is not just about talking about a payment. So there are also infrastructures, soft infrastructures like AI, big data, blockchains, supporting it, make it to grow. And you look further down the slides, you can see that Malaysia is still ranked number 1 in Islamic finance, but we are getting more into the technology side of things. Okay. And just to give you a landscape on how payment landscape grow in the past 2019, 2020. In 2019, an average person have 170 e-payments transactions. I think right now we are close to about 180. Okay, online banking transaction goes up by 49%. I have to say this is because of pandemic that strikes. Everyone's going online, buying things online. E-wallet transactions, my God, it went up to 131%. And merchant recognition for QR code acceptance, 164%. So that's quite a big leap and quite a big jump. But if you're, as we MDEC involved in part of the Malaysia digital economy roadmap or blueprint, the government has set a standard to push up the 170 to 180 at the moment to 420 in the next 5 years. Payment, contactless or cardless or even with card is going to play a big role in this as well. Okay. And of course, you cannot miss out when you talk about the biggest story around right now is all about digital bank. Of course, as you know, on December 31st last year, Bank Negara issued out a banking license framework for applications. And what we were told that is going to give out up to 5 licenses. And this license hopefully will be announced in the Malaysian FinTech Week 2022, which is happening on January 24th to 28th. The MDEC will be participating as well. Because of course, this is going to be a big thing. As you can see, there's a lot of applications going on. A lot of people are applying for it, a lot of corporates as well, local and foreign. So, but these are the 5 criteria that you have to adhere to. But the most important of 5 is you have to be on par with financial inclusion. You must do financial inclusion. So a lot of people ask me, Chang, Malaysia 95% bank. What is that to financial inclusion? But you look at technology-wise, right? From what we all see, Malaysia you can separate from there's an urban area, suburban area, and rural area. All the technologies are happening exactly in the urban areas. All the e-wallet transactions, all the cards, Honestly, I mean, my fellow panels here, how often do you use an e-wallet? Where you have ATM everywhere. But if you move on more about 15-20 kilometers into the suburban areas, that's a different story. The infrastructure needs to be there, And then you see, I'm sorry, but you see less and less of banks being when you move into rural areas because it doesn't work for a bank for OPEX and CAPEX. Even with 95 to 97% bank population in Malaysia, how many of us actually uses products and services besides as a CASA account? When personally, it's just where your salary comes in, you take it out, withdraw, and that's it. Besides taking a home loan or even a car loan, what other loans do you take from a bank? So that's where we're trying to do. We're trying to push more towards on what to serve the economy. So as a developing economy is this. How do you push more banking products, like for example, insurance and digital bank could be a solution to it. Okay, so let's go on down to what MDEC does to build an ecosystem. So this was back in the days where we established together because FinTech can never work without the regulators. MDEC is not a regulatory body when it comes to financial services. What we do best is we drive the industry. So we help the industry. But at the same time, we work with 3 particular stakeholders or 3 key pillars. Number 1 is, of course, this is part of the Malaysian digital roadmap. I was agreed upon that MDEC is going to lead and build an innovation accelerator. Okay, I will go into more details with that because that's part of the KPIs that we have to deliver. So this is to attract more FDIs or DDIs. So we are talking about not just growing the local champions, but also foreign champions who wants to invest in Malaysia. Number 2, as MDEC, that's what we always do is on capacity and capability building development. So FinTech startups come to us and say, hey, how are you going to help me to gain? How are you going to help me to gain market access? I need amplifications. I need some legal and compliance, So we do have special programs that cater for it. We call FinTech Booster. It's actually a program, I will talk a bit more into it. It's actually a program that is endorsed and also built together with Bank Negara. And the third one, of course, we have to look at the rugged as well. When we talk a lot about industry, one of the things we have to ensure that we deal with rugged. So we want to ensure that products and services get to the rugged in terms of social finance and fintech adoptions. So MDEC has various programs, and what we do from my end is we ensure that there are digital products from a financial angle to go into all these rugged-centric. For example, you're going to the gig workers, you're going to the e-commerce, things like that. And this is just a snapshot on the ecosystem, key stakeholders, influencers, and all. So on top, we work very closely with the regulators, the policy holders, and on the bottom, of course, one of the biggest partners that we work closely beside the regulators, SC and also Bank Negara, we work very closely with Fintech Association of Malaysia. Okay. And I mentioned earlier on Fintech Booster. So Fintech Booster is a program that is run together with Bank Negara. You look at Bank Negara's website, it's there. You look at the digital roadmaps, all there. So what we do is, when we did a survey, okay, with fintech startups and all, with FAOM and Bank Negara, we found out that 91% of the fintech startups, not just startups alone, corporates as well, everyone wants to jump into the bandwagon of fintech. So they just submit all kinds of applications to the central bank. And it's got about 100 overs, and these are not easy applications, And what we found out that most of them doesn't know what they want. They say, I'll just submit whatever I want and whatever Bank Negara can afford. So what we did is, one of the first sessions we did is legal and compliance. So we help fintech startups, and also regardless the foreign, local, plus corporates as well. We'll be launching the business model, market access on 2022, and also the technology, it comes to API. Because of time, I'm just going to run through this a bit. These are some of the things that we do, okay? And just to give you a snapshot, we have 12 legal partners working with us right now. And the best part is, they're all doing on pro bono basis. So if you are a fintech startups, you're corporates, and you have some legal issues, you can actually join the program. And the program is free. No hidden charges, no charges at all. No MDRs at all, okay? Okay. So it's free. So these are the ones that we launched. We have about 557 users, run about 28 programs, and we also conducted 34 one-on-one. So you'll be given a one-on-one session with one of the selected legal panels, and all the 12 legal panels, 6 are dealing with Sharia compliance. And one of them actually, one or two of them actually cross between SC and Bank Negara. So they can deal with all this. So for fintech startup, this is what we're trying to do to build the robust ecosystem. Okay, my last slide is, okay, when I talk about Islamic fintech and all, right, there are a lot of things to say. So what are we doing about it? You talk about, we should be number one. So we are being tasked to look at the ecosystem. How we need to build is, we need government intervention, no doubt about that. In order to build a robust Islamic fintech ecosystem, number one, we need to set up a National Islamic Fintech Committee, comprises of religious bodies, authorities, and regulators as well, and stakeholders as well. So there are multiple stakeholders that need to be in it. Okay, number two, of course, we have more strategic partnerships. That's where MDEC comes in. We partner with multiple various stakeholders within Malaysia and outside Malaysia. Third one is, of course, we need to amplify. We need to tell people that, so by doing that, you need to produce reports to say that where are we now. One thing about Malaysia, we don't tell story much. So we need to develop more reports. Okay. I hope that will give you a snapshot of what the ecosystem is all about. Thank you. And anything, you can just refer to the website given on top. Thank you, Hati.
Great. Thank you very much, Tan. So, wrapping our first agenda for today is Mr. Hanif. So, Mr. Hanif is actually PNMB's Product and Business Development Specialist, Smart Card Division. So, Mr. Hanif is actually an industry veteran. So, he has over 30 years of experience under his belt. He's actually a very familiar figure within the EME card manufacturing and postal business. He has served at some notable local and international organizations. So prior to joining to PNMB to help develop the smart card offerings. So take it away, Mr. Hanif.
Thank you, Mr. Adi, for the introductions. Again, welcome to everyone to this webinar, and hope that you are doing well and stay healthy. Just now, Encik Fazrul mentioned about the card innovation, okay, the card evolution from the cardboard payment card to the magnetic strap, and at the end go to chip card. So we go back to the history. From this study, we started from French banking associations attempted to use the smart card technology to reduce fraud, because as what mentioned earlier on, that the issue of magnetic strap, the data can easily be cloned. Okay, it easily can be quantified, and because of that issue, and with the technology can easily clone the card, and then the smart card technology that time is the solution. That's why from the history shows that the French financial institution start replacing the magnetic strap in 1992, and that will reduce the credit card frauds at that time. If you go back to smart card history in Malaysia, what I can share for this one, that in 1992 is the first card implementation by the Bank Islam. So why I bring Bank Islam in this picture? Because I was the project lead for the first smart card implementation. The business requirement is to have the ATM card, but that time Bank Islam, there is no ATM, there is no ATM card, and database is distributed, and there's no connectivity between one branch to another branch. So the success story from the France, the technology from the smart card, we bring it here to Malaysia, because smart card can do read and write. Okay, so Bank Islam last time they only have the passbook. So the first implementation at the Bank Islam, what we did is we replicate whatever transaction recorded in the passbook will be written in the smart card. So that will solve the issue of the connectivity. They will solve the issue of distributed database, and at the same time, the same customer, the same cardholders can perform the transaction at anywhere at the ATM machine, but only at the Bank Islam. That's why how we start the project. So meaning that that project shows that the smart card are capable and to support the ATM card industry without starting with the ATM, without starting the magnetic stripe. So that project to me is very success in 1992. But 10 years after that, that is the first PMPC implementation to all banks. What is PMPC? PMPC is the Payment Multipurpose Card. During that time, they got two initiatives. One is PMPC, the second one is the GMPC, Government Multipurpose Card. So what we did, the project championed by MAPS, now is PayNet, okay, there is a conversion exercise from magnetic stripe to smart card. And from what happened during that project, there is incidents, the clone card for one bank, then make all the banks panic, and what happened, and the project become, the conversion become, it's mandatory to the banks, and at the end, all the exercise to convert the magnetic stripe to a smart card fulfilled during that a few years. So that is in 2002. And what happened in 2015, there is another recording exercise from PMPC to MCCS. What is MCCS? MCCS is Malaysian Chip Card Specification. There is also the EMB compliant as well. So what we can see is from Bank Negara Statistik, right? In 2015-2016, more than 40 million cards has been issued to the cardholders, meaning there will be a recording exercise from the PMPC card to the MCCS card. And we can see now that this card validity is between 5 to 7 years. If the card issued in 2015 is 7 years, so next year will be the card replacement. So what I can see now that all the card in our wallet, yeah, whether it's already expired that we need to replace now, or maybe by next year or the following years we have to replace. And that card valid for 5 or 7 years. So we can see the card business or the card usage still relevant in the market. Okay, when we talk about the innovation on the ID and the banking card, we can see we have a few physical and logical. On the physical card, will be on the recycle card, the bio card, the metal card, and all these things that most of you are aware. But again, for the EMB card, for the banking card, all these features or all this innovation must be validated by Mastercard and Visa. Especially we as the card manufacturer have to send this card to verify the card whether this card we can produce in our factories. This primary biometric modality in banking. Okay, actually this 5 biometric multi-value today for commercial use cases is driven by the smartphone. Okay, from the smartphone you can see the fingerprint recognition, the palm veins, the facial recognition, the voice recognition, and also the other scan. So on the financial card, now we have started with the fingerprint recognition. So we can see in Europe, and most of the Europe already started using this the bio card using the fingerprint. Okay, before we go to that, as you fully aware that if you are in this EMB business, EMB card issuance, previously the card issuance, the CVM, the card verification method based on signature, based on offline PIN, online PIN, now is by the fingerprint recognition. Okay, the next 2 slides, I want to share the innovation made by the international scheme such as Mastercard and also Visa. So this is one of the roadmap by Mastercard, and I'm not sure. I think you are fully aware that Mastercard will already announced that they will retire the magstripe. So why retire the magstripe? Okay, the first thing, because of the successful adoption of chip and contactless technology in almost all the regions around the world, delivering more security and convenience. So meaning that if you are already chip, but already chip based, already chip card, and the security is there, so why we need the magstripe? So that's why this is a roadmap by Mastercard that they will retire, they will remove the magstripe, and with the timeline as below. Okay, the 1st April, okay, in 2024, for any newly issued EMB cards, you need the physical magstripe. In April 2029, and newly issued EMB card globally must not have the physical magstripe. And April 2023, okay, still long time, but all card in circulation globally must not have a physical magstripe. Okay, this is one of the innovation made by Mastercard. There is a few things that I just share one of it. And same thing with Visa. Okay, one of the innovation the requirement makes is digital first, meaning that the physical card without account number, without CVV, without expiration date, and account information is issued in the issuer website. This is one of the innovation, the new requirements by Visa. So they get a few more introduced by Visa. And if you can get more, if you want to get more details, the only way is you can go to Mastercard or Visa contact persons to get more info. So for the next 3 slides, just what mentioned by Encik Junadi, we are certified card manufacturer and possession. What I'm sharing now is our certificates, yeah, because we're certified for Mastercard, since March 2019. For Visa, we certified as a personalizer in 2019 and as a manufacturer in 2020. And also, we also certified by our local scheme, PNET, as a card personalization and also as a card person as well. I think that's all from me. Much for your patience, for listening, and I pass back to Mr. Adi.
Thank you, Mr. Hanif. Thank you for wrapping up today's first agenda. So with that, much thank you, a very big thank you to all the speakers for your concise, straight to the point presentation. So back to the audience, should you have any questions, please post them in the Q&A section, which we will address later. Ladies and gentlemen, next on the agenda, we have a virtual soft launch for PNMB's Smart Card Technology Center. Now, it is my honor and privilege to conduct this virtual soft launch, and I welcome you to see what PNMB Smart Card Technology Center is all about through this video.
Welcome to Percetakan Nasional Malaysia Berhad Smart Card Technology Center, Malaysia's leading smart card manufacturer. This is a high-security facility. We adopt strict security controls over all movement throughout the facility to ensure safety and security is maintained at the highest level. The production area of smart card manufacturing needs to be free from any foreign particles. Any card with visible dust or hair will be regarded as faulty products and will not be issued to any of our customers. Our tour begins with a process where up-to-date designs are transformed onto a thermal plate that captures every bit of fine lines and its brilliant details. Realization of the design with its vibrant colors and special features are accomplished in the printing processes. In another section, the card's antenna is made by ultrasonic wire embedding process. The presence of an antenna enables your daily contactless smart card experience, ranging from the simple office door access to the more intricate contactless payment. Think the humble smart card in your wallet is made from a single plastic sheet? Well, smart cards consist of several number of layers stacked onto each other through the collating process. With the right temperature and pressure, these sheets are laminated together to form a single sheet that are sturdy yet flexible enough for robust daily usage. The laminated sheets are then punched into a standard card size that would fit perfectly into your wallet. Each card is automatically inspected for any non-conformity before handed over to the next process. The cards must be clear from any scratches and foreign particles. For cards with a contact chip feature, a cavity which holds the chip in place is precisely milled to its desired depth. The chip is then implanted securely onto the card. Next, holograms and signature panels of various shapes and sizes can be stamped on the card surface, giving its own unique identity for any Europay, MasterCard and Visa cards. This process marks the end of the card body production. We take emphasis of quality as our main concern. Each batch of production will go through strict quality control, ensuring our product conforms to international standards. Fulfilling your satisfaction is our motivation. We are now moving to the card personalization area. Here, the chips are activated for usage and personal data of our end users are encoded. These now functional cards possesses its own unique identity that caters for any requirement from its user. Thank you for joining our virtual tour. If you are interested in more details of the process and the amazing technology involved, we would certainly welcome your visit to PNMB Smart Card Technology Center.
Thank you everyone for your kind attention. To learn more about PNMB's Smart Card Technology Center, we welcome you to reach out to us after this webinar. I also encourage you to scan the QR code to fill in the feedback form and submit your business cards via our official webinar WhatsApp, the same WhatsApp number you receive the event reminder from. So 20 early submissions will be given a complimentary Grab food voucher from us. You can also access the form via the link provided in the chat box. Now, moving on. We are now nearing the end of our session with our third agenda for today. A panel discussion on card trends in 5 years. Is the smart card industry heading towards a sunset business? Right? So during this panel discussion, our speakers will share their insights on the topic based on their experience and personal anecdotes. Additionally, this is actually an interactive session, so I invite our esteemed panel speakers to join in. Feel free to join in and contribute to the points, topics, perspectives being raised here. Right? So to kick off the panel discussion, I would just like to conduct a quick poll to the audience first to gauge the general sentiments of our webinar team today. Please vote on your screen. You should see the pop-out appear shortly, right? So while waiting for the results of your vote, I would like to get a quick yes or no response from each of our panel members here on today's team question. So the team question is, card trends in 5 years. Is the smart card industry heading towards a sunset business, right? So I'll start to my right first, Mr. Junaidi. Yes or no?
Well, question to a manufacturer, of course I will say no, but of course it comes with a few noted on innovations and things, that we can actually discuss in the future and how do we move forward with that.
Understood. Thanks, Mr. Junaidi. Mr. Tang?
I would say it's a mix of both. It will go into sunset, but you won't know when. Because if you say it depends on the country, so like Malaysia, like as I mentioned earlier on, financial literacy is coming from a fintech perspective. Yeah, financial literacy is an issue, but digital literacy also is another issue. Yes, we have a lot of people using smartphones and all, but when you talk about transacting over mobile phones, it's still a very big trust issue between consumers and also the banks. And this particular gap grow much more bigger as you move out from the urban, suburban and rural areas. Like I say, yes, you can see we are very much in social network and all, but how many times does a consumer update their phones or even update their apps for more security purposes, Right. And once they get hit one particular transaction, and that's it, the whole trust is gone.
Yeah.
So I would still say that at this particular moment of time, card is still very much relevant.
Thank you, Mr. Tang. Okay, over to my left, Mr. Fazrul. So, what is your take on this? Is the card business going down a sunset direction?
Tang with a very good issue or trust issue. Customers tend to lose trust when there's loss of transaction. So for me, if there's any fraudulent transaction happens in especially mobile phones. So for me, the card industry is still strong. For me, it's a no for me. For me, the card industry is still sunny for me. So it's not si Tang is laughing.
But Mr. Fazrul, can I raise one point here? Because earlier you mentioned, you gave example, even Mr. Hanif also provided example. There was a breach of security on the Max Stripe, right? And then only in 2024 you are going towards, Mastercard is going towards phasing it out. So isn't that sort of like a small paradox? Max Stripe, but then you talk about the mobile trust issue. So what is your take on this? Or why does it seem more biased towards smart card? Or is it because of the maturity of the technologies? What do you think?
For me, it's the maturity of the technology, because you can see from chip cards how it from the smart card perspective, how does it evolve? So it evolved from a cardboard card to a plastic Max Stripe to a chip, a little chip and pin. So maybe in the future we might see, as what Encik Hanif showed, the chip card might go into biometric verification. So it will be becoming more secure and secure later in the future. So that's why for me, the smart card industry is still strong.
Right.
But because of payment initiative on the Duit Now QR code, that's a big challenge for the banks who are not looking into digital issuance to compete with that, because the cost of acceptance for Duit Now QR code is relatively very cheap compared to card acceptance. So that's a big competition between schemes and PayNet right now on that. So for me, as of now, it's still strong, but the other technologies are catching up.
Right, understand. Thank you, Mr. Fazrul. So over to you, Cik Hanif. Mr. Hanif. So, what is your answer? Yes or no, according to you?
My answer is no. For the details, all the panels is already talk about it. I mean, to me, the card business is, the card technology for the smart card is still there.
All right, thank you. So, so we've just received the results from the audience. So generally, so it's a very interesting result indeed. 64% voted no. So, okay.
So meaning we still have jobs for the next 5 years.
we still have relevance, but it's also driven by the fact that I think, you're fulfilling all the magnetic stripe which Cik Hanif has pointed out earlier. So I think also the points that Mr. Tang has also pointed out.
I'd like to add one more. I think, like I say, it's a balance of both.
Yeah.
At the moment, I would say that because of convenience.
Yeah.
The card is very convenient. You just take it out and you just tap in there. You don't worry about security much because you know that it's quite stable.
Right.
But you look at places like countries like China, where they have this thing we call super app. Everything is done within the app itself.
Phones, yes.
And when that happens in Malaysia, that's where the sunset will start to begin. So that's why the content is important. What drives the content?
So I have a question based on that for Mr. Fazrul. So correct me if I'm wrong. So according to our understanding, so we're talking about banking right now specifically, right? We're talking about banking. So coming back to something that you mentioned earlier. So normally the card is tied to a CASA account.
Right.
Right?
Or loan credit.
Loan credit. Actually, this is also tied up. I'm jumping the gun here a little bit because actually we received a question from the audience: virtual card versus physical card. So I'm just jumping in a little bit because I think it's necessary now. No. So now the card. So correct me if I'm wrong. So whatever mobile payments or touchless payments, etc., that we have right now is actually based upon an account which has already been issued at least a debit card. Am I right? So what it means is, so before you get your mobile touchless card, you still need to get a physical card. Right? So I believe this question VID, virtual ID, that means going back to your statement of digital banking. So to issue the account without a card. Okay, so from a banking's perspective, so how do you see this? Is this going to happen? I mean, Bank Negara has already come out last year.
The eKYC.
The eKYC and all that. So how do you see this moving forward?
I think moving forward, the digital card adoption in Malaysia, I think, will grow, but the physical card will still be there for me, because for me the most important part is Malaysia is still a cash-based society, whereby majority of the transactions are done by cash. So I see Tang not agree with me. Okay. Actually I explored digital issuance with the card scheme partner where we had MASB Visa, whereby we are exploring cardless issuance to customer. Right. The thing is whether customer can accepting a digital card rather than a physical, because for them to adopt a digital card, they need to use their mobile phones to interact with the point of sale terminal. So the thing is whether the Malaysians are ready for that, to use their mobile phones, whether they have that trust issue with their mobile phones, because like Tang shared, maybe some nations don't update their apps because apps are constantly updated, maybe weekly or daily or something like that. So for me, it's a question of maturity. So I think I can see banks starting to issue virtual cards,
Pure virtual cards.
pure virtual card, correct? But the physical card is still there. For me, until Malaysians start using less cash, then we can see more virtual cards out in the open.
I think this relates back to your slide earlier. You mentioned that there seems to be a gap in urban and urban and non-urban areas lah. With regards to in your terms, financial inclusion, you're talking in terms of technology, right? Rather than the banking, but normally when you say financial inclusion, you automatically think about the banking side of it. But in MDEX context, you're talking about from a technological point of view.
Correct.
I see. So yeah, okay.
Well, I just want to add a little bit. I think, quote unquote, I mean, the reduction of the usage of cards might be reduced, right? I mean, get me if I'm wrong, because last time, in one bank, one person can have 2-3 cards, right? Nowadays, it's been reduced, and you only just need one debit card and maybe, just one credit card. But those days, last time, you have a wallet full of cards, right? I mean, one bank can issue you like 3 or 4 cards, right? There will be I think it's already come to that era where one bank, a minimum of 1 card per customer, or maybe 2 cards, depending on the functionality that they want to do, and that's it. And the rest will become like virtual cards, and if you wanted to have different sort of products, then it will just created a new virtual cards within that particular card. So I see that is coming to trend, and definitely it will hit the smart card business with regards to volume. But again, I do not look at just the banking business. I mean, I'm looking at transits, I'm looking at ID cards and everything. So the totality, as far as smart card is concerned, it will fall back to the authentication. Now, how comfortable are you to do your authentication within the physical or within the eKYC, right? Or within the whatever infrastructure that you actually have. So these are some of the things that you have to take into consideration. Yeah.
I think that's very true. That's very true.
Yeah.
For example, right, when you talk about Face ID, facial ID, I mean, Apple, I couldn't mention that Apple has a big issue a few years, I think when they launched about 2 years ago, where facial ID, they couldn't separate between the tweets. That's quite dangerous. And technology right now, you can actually put someone's face on it, and that couldn't even differentiate.
Actually, that's a very interesting point you're bringing up, Mr. Tang. Did you come across any such considerations, maybe from Bank Negara with regards to facial recognition?
I think Bank Negara, when it comes to eKYCs, right, I think the bank should know. There are several false because I was going through the false calls, and I say it's the amount of false that you can deliver upon. You hit a certain threshold, that's it, they will call you back. So, and you have to put certain level of security on top. So from biometrics, it could be a 16-pin OTP, then your facial recognition. Depends on what level is the bank comfortable for. Because at the end, is the bank going to be accountable for there's any frauds?
Yes, correct.
It's not going to be central, right?
Everything's backstopped.
I know that very well.
And again, we're talking about chip, contact chip, I mean, now you do waive for certain amount of retail value, and you do contact chip for a slightly bigger amount. Again, this level of security will actually, balance out.
I'd like to add on this part. I read this Bank Negara statistics from for the e-money transaction. They got one for network base and also the card base.
Correct. Yep.
From as of July 2021, you can see the card base is about the number of users is about 44 million. Okay, but for the network base is about 74 million. Okay. But that is more on the number of users, more on the not the ticket size. Maybe for the e-money, the network base, maybe the ticket size is smaller, maybe. So again, I just sharing the statistic. What I read from Bank Negara is more on the increasing of the e-money transactions. But even though the e-money transaction, but e-money based on card still there.
Thanks, Chanil. So So bringing back we veered off a little bit towards eKYC, e-money, digital, etc. So I'm going to bring back the topic back to cards, right? So, but it's all interconnected, interrelated. We understand that. Okay, I have one question for Fazrul. Now, in lieu of the current global chip shortage, so has this actually impacted your operations, and and does this have any impact for your future plans?
For me, the current chip shortage doesn't affect my operations currently. But the vendors that we engage right now, actually they inform us that their SLA is not a bit different, because normally they will deliver the cards 3 to 4 weeks to us upon card order. So now it might take longer than that. But for me, as long as MBSB plan properly all their new card issuance, because we don't have any recarding, because we just launched our card back in 2019. So our recarding is only in 2024. So for MBSB perspective, we are not that affected.
Okay.
Just maybe for new issuance, that maybe we have to look at ordering that earlier lah, if there's any new issuance or new product that we might issue.
Right. Okay. Glad to know that, thanks for sharing.
Sure.
I actually have this question which actually I want to open up to all but I will start with Mr. Tang first because obviously being in MDEC, it puts you in a position where you're able to see things perhaps a little bit more holistic compared to us right? So the question is this managing expectations of various stakeholders such as end user customers, right, who expect robust, seamless, secured, uninterrupted experience, while adhering to strict regulatory compliance requirements, right? So while then formulating a sustainable business model,
Correct.
right, that makes sense to all. So this is actually a very daunting challenge, right?
Yeah.
So from your perspective, could you share some observations you've had of industry players, governmental bodies attempting to address these issues?
Okay. I will speak from various points that we've seen. Let's start with the startups.
Yep.
Okay, I mean, at this stage, the majority of startups in the fintech ecosystem, it's quite up there. You know, a few years back when fintech was a buzzword, everyone was jumping to the bank. I want to take over the bank. You know, I want to disrupt the bank, which is impossible. We have seen business plan. I have myself seen business plan with this. Only 2 people in a team or 5 people in a team, and they would like say, you know, you give me. They go just say, I want this license. Give it to me. I will disrupt the bank. But that doesn't work in reality. Okay, from the startup perspective, I say they are getting a lot of them has dropped off. The matured ones are growing steadily, but they also accepted the fact that it's not about disrupting anymore. It's about complementing. It's about working together with the big corporates or the financial institutions themselves.
Right.
So that it's gone to that level.
Right.
Okay. And then that is the fintech side of things. And then we talk about corporates. And we talk about banks. I'm sorry, but this is what I see in the banking industry. So, I mean, when it first launched, you know, you see a lot of chief fintech officers in the bank. Am I right? If you scout around, there's none of them there anymore. You know? Or you cannot just term yourself a bank that say, okay, I have some digital services, I'm a digital bank now. No. That is part of your evolution. Digitizing your product is part of your evolution. You know? Then that's why banks and corporates have to start looking into how they can work together, and what are the actual things they want to solve within a bank.
Right.
You know, that's from the corporate's perspective. From the regulator's perspective, of course, I have to say Malaysian regulators has been very progressive. Securities Commission, ECF P2P, we are number 1 in the world. I'm sorry, we are the first one in Asia to launch it.
Right.
Okay, and in 2020, I think P2P had closed up about 1 billion.
Right.
Previously, in 2019, it was about 571 million.
Right.
So we are quite there when it comes to technology. And Bank Negara, I mean, okay, we might not be the first to launch a digital bank, but we are somewhere there. And then and for regulators, it's quite simple. I think the banks should know. It's always about safety. Security comes first. Because if you say, it's very simple. If you put yourself as a consumer, anything goes wrong, first of all, you hit the bank, then you hit Bank Negara and say, how come you put this in place? You know, there's so many scams, why you didn't do this in place? You know? So, as much as we want convenience, but there's also a fallback that there's certain level of security has to be there. So it's just a balancing act that consumers has to do.
Understand. So, taking all this into consideration, all the points that Mr. Tang has raised, so actually I have a question for you, Junaidi. Okay, see, sorry. I see. Okay, then there's a small technical thing. I'll get back to you in a minute with this question. Hold on. So, while waiting for Mr. Junaidi to come up, so perhaps I and invite Mr. Fazrul on behalf of for the banking side to perhaps you respond to Mr. Tang's comments.
Yeah, I agree with Tang because it's a balancing act between convenience and security. Because for me, you can't have both.
Right.
You definitely can't have both. There's a certain tolerance in there is a certain type of tolerance that the banks need to have to open up convenience, because if you still remember, contactless adoption in Malaysia was relatively, for me, before COVID, it was relatively quite poor. Because you can see when you walk to supermarkets, when you try to use your card, merchants are not aggressively promoting, oh, you can tap your card at your terminal, at the terminal. But because of another variable that came in, which nobody expected, pandemic.
Yeah.
So from contact, it became contactless. So I can share with you guys the information that PayNet shared with me. My debit transactions, most of it are contactless now, rather than contact. So customers are migrating more towards contactless. So previously, banks are quite rigid in contactless acceptance, because for them it's a big risk, because for chip and PIN, the liability is at at card holder, because they use their PIN. But for contactless, it's at bank, because there's no PIN entered. So basically, and if let's say you lose your card, you can basically bring anybody's card and tap the card at the terminal.
Thank you for sharing that piece of information. I just realized it already. Please go on. Sorry
Okay.
to interrupt.
So because of COVID, the banks are changing their parameters so that because last time banks might have contactless account where they reject maybe more than 5 transactions a day for contactless. Because of COVID, banks are revising that parameters, so they are adopting to whatever customer wants. They are adopting, and adopting to the changes. And but obviously there are parameters to control contactless transaction, but because like I said, there needs a balance between convenience and security. Yeah.
So actually, thank you very much for sharing this information, and also Mr. Tang, because now with these two things, I think now I can now fully go to Mr. Junaidi here, and also open it up to Cik Anip lah. So this question lah. So, do you think smart card applications will find itself a new niche of a hybrid or convergence between physical secured identity, digital identification, and payment applications? So if so, what would be the key considerations for this to happen? Actually, in fact, not just Junaidi and Cik Anip, but also to everybody lah. I welcome you all to this discussion. But Junaidi, can you start first, please?
Okay, but before that, all right, I just want to touch a little bit about the global chip shortage just now. Actually, the problem is more towards us. Because from a 3 months lead time now, we are getting up to about 6 months, and we need to, we need to formalize what type of chip they want to buy and things like that. So, again, these actually majority come from the industry players, right? They are actually buying only from 1 or 2 few players, and a lot of them are outsourcing it. So hopefully it will normalize within the next 2 years, and you will get back the chip within a certain period of time, because now everybody using electronic stuff, even PS6, PS5, phones and everything. So that's one of the major reasons. But anyway, let me go back to your questions. I think this is a very long and also difficult question to answer, but I'm going to touch it bit by bit. Okay, first of all, you talk about physical identification, right? And then you talk about digital identification. Then you talk about payment transactions.
Yes.
Now these three items, and what are the considerations that you want to consider? Now, first of all, let me just derive this one by one. What is payment transaction? Payment transaction means anything got to do with any types of monetary transfer, which is bank to bank, or if you talk about services to services, like like the transits and everything, so players. So meaning to have any payment transaction requires some kind of point-to-point transfer, right? Now you put aside, then you need at least either digital identification or you need either physical identification. Now physical identification may be referred back to your MyCard, right? Your ID cards or your driving license or what. So in Malaysia, we are referring back to MyCard, meaning to say that even you go to the bank, you use your MyCard as your identification to create your banking card. Now you need to go through that process. Those are the enrollment that requires. Just imagine if you don't have the MyCard, right? You need to have the infrastructure to do the eKYC based on whatever standardization that you can accept. Meaning to say, if you don't have MyCard, every single bank or every single counter would require to have some kind of enrollment facilities to make sure that you can come up with that digital identification. Now the usage of digital identification again are also referring to any types of electronic equipment like phones or your tablets or your PCs. So you must have at least one of those in order for payment transaction to be done. That's why at the end of the day, if you fall back to MyCard, you got your banking card, then banking card becomes the peer with PIN, chip and PIN, and then you get the two-factor authentication.
Let me interrupt you there for a short while, Mr. Junaidi. So I'll go back to Mr. Tam, because I just remember when you were talking about that, because you were talking about the super app in China, right? So if you could share, I mean, it's from China, but if you could share, if you have any awareness, is it something purely virtual, or is it something based on something physical, like what Junaidi was talking about, or how?
It's actually on the go.
On the go.
On the go. So you can still go do whatever things you're supposed to do, but the convenience that's set up to you, right? Before I can walk to a restaurant, I can book everything online. I can plan everything ahead. That's why the convenience is there. So that's where the convenience might supersede some security issue that might not have. So in the era of where speed is everything, so some people would better accept that, okay, I'm okay with little less security, but I get the convenience as my own. So it's up to you. It's which side you want.
So I think this is basically the key question sebenarnya. The key question between physical and virtual, right? So convenience versus security, right? So
and maybe the volume. I mean, we're talking about transaction volume.
Exactly.
If you're doing it at 7-Eleven or KK Mart, you buy $5, $10, $15, who cares? As long as I just take out my money, I just pay and that's it. I don't really bother. Even if, let's say, at that point of time, I was using fraud money, they will be like, what our traceability that we are looking at? But again, we don't want that to happen. But we're talking about slightly bigger transactions, right? Then of course, these are something that you have to take into consideration.
Which relates to the point of the sustainability for all parties, lah.
Just look at that. And the other thing we didn't look into is the cost of infrastructure, the cost of POS, the MDR cost. These are little things that merchants are still very much prefer cash. Because I get cash dollars, you pay me $10, I get a value of 10. But if you pay me $10 in a card form, could be I can get every $9 or 90 cents and that's it.
Correct.
So it's a check and balance that you have to go. Technology comes at a cost, that's all I say.
Correct.
Yeah.
So one question to you, Chief Fazrul. So typically, how what would sort of like influence or govern your risk appetite in this, let's say, virtual and physical kind of thing? I mean, convenience versus thing. So I mean, from a very high level perspective. So generally, what guides your decision making?
Okay.
Or your policies?
For if let's say banks are to issue virtual cards, the first thing is the EKYC part of onboarding the customer lah. So what kind of tolerance that you can build into the system, what kind of risk parameter that let's see if the customers fail the EKYC, whether they are rejected upfront or ask the customer to walk in back to the branch and apply back, so they won't lose the customer.
Yep.
But they also need to think that if let's say they set the parameters too rigid, they lose the customer. So it's a balancing act between the banks, the customer, and also our big brother lah, Bank Negara.
Right.
Because
you're allowed to say that on live, huh?
Yeah. They always they overlook us. So we need to ensure that we provide convenience and also the assurance of security to customers when they apply for EKYC.
Okay, understand. Chanip, I have one question for you.
Yeah.
Okay. It goes back to COVID-19 again lah, right?
Oh,
So, you see, so we're all talking about this touchless payments lah. Kan? It's a very dynamic conversation happening all around us. Now, so you have this touchless payments thing, which was already accelerated by COVID-19 lah.
Okay.
Right? So, do you think physical smart card applications, going past the timeline that you mentioned, right? So that is on the physical feature of the card itself. So, but do you think physical smart card applications for the financial sector will still somehow remain relevant in the next 5 years in the advent of all these things coming in?
Okay. Back to answer that question.
Yeah.
We know that from statistic shown by Bank Negara, okay, the number of cards issued is about more than 40 million. And the card, I can say, is already due now to be replaced. Okay, so the replacement card exercise is already taking place from now until next year or the following years after that. So what replaced, it will be another 7 years. So the card usage is still there. Okay, it's still relevant.
Right.
And from the statistic from Bank Negara shows that even for the e-money, they got two types of the e-money transaction. One is for the card base and one is from the network base. So we can see that transaction, the card based on the card usage is still there. Okay.
So, if we follow this line of this explanation that you have just provided us, would it be safe to say that this could be somewhat like a global trend? Or is it probably something very unique to Malaysia? Or, I mean, it's just speculative kind of thing. I mean,
okay, just let me answer first.
Yeah.
The statistic I just shared is based on Malaysia.
I understand.
But I believe for every card in if you compare to so-called the Mastercard, Visa, there's a validity of cards. Okay, even chip also have the validity. Okay, so because in terms of the security is there. It's proven. It's secured card. There is a matter of security. But even though with the new, when it comes to COVID-19, people cannot go to the bank to withdraw the money. That's why the e-money transaction came to the picture. So there's a balance for these two. Okay. So again, whether maybe for the e-money transaction maybe a small ticket size.
Right.
Okay. Maybe number of transactions is increased.
Right.
But the ticket size is smaller. Maybe. But you can check the statistic. But the debit card transaction or the credit card is maybe the volume, the value is higher.
Right.
Okay?
Right.
I mean, just give that example. But it is complement each other.
Understood.
Okay? And for me lah, if we are as the marketing head of for the banks, okay, if I have what do you want to promote? You want to promote a card or you want to promote your mobile, for example? For example, in your mobile phone, okay, they got so many banks application here. Okay, bank application, and on the other hand, you have the card. With your, for example, it's MBSB Bank. Okay, but in apps, you got so many banks. Previously, Samsung, for example, have the Samsung Pay. and also have the Apple Pay. So when you perform transaction using the phone, are you promoting the phone or are you promoting the cards? I mean, the question.
So, I mean, we have a bank here. Maybe what do you think on that point raised by Encik Hanif with regards to the marketing? Is that something for you take into consideration?
Looking at banking perspective, normally those two products will compete with each other. But normally they will compete with each other. But like I said, mobile internet banking now is now equipped with our corporate centers, whereby you can use your mobile internet banking to make purchases and any purchase with duit QR code. So with that, normally customers are with the QR code. Normally customers will go for low volume transactions, such as maybe purchasing something at 7-Eleven or
Right. Okay, Cik Fazrul, there's a small technical point that we need to address shortly. Please hold on to that line of thought. I'll come back to you. So I'll quickly push it back to Mr. Tang, Mr. Junaidi, if you have anything to, I mean, I felt like you were wanting to say something to that.
Actually, I mean, honestly, I mean, previously we always look at card as credit cards, right? And you know that now credit cards usability is actually quite less. But when the debit card comes in with the wave, it actually spurs up the smart card business. It actually grows. Used to be you have a card just to take out money from ATM, but now that particular card, it doesn't look like a card anymore, you know, because people keep using it every day. So I think this particular what you call habit, which I think already been created since 5 years ago during the first carding of chip carding was done 5 years ago. I think that habit is something that will go on for the next 5 years. But again, you know, the demographic and also maybe the frequencies and everything will change. I mean that's where I'm coming from.
Okay, so thanks, sir, to Junaidi. So going back to your point earlier, Cik Fazrul, if you could keen to finish off your what you were sharing earlier.
Okay,
Thanks.
From my business, I just want to share that there's a competition now between acceptance and merchant, whereby you have Duit Now QR code, which is the standard QR code for Malaysia, and also you have your card acceptance which is Visa Master. For merchants, they will might prefer it depends on the merchant itself. Big merchants might prefer Visa or Master. The smaller merchants, like smaller traders and smaller businesses, they prefer Duit Now QR. Because why? The acceptance cost of the acceptance cost at merchant, because normally POS will cost a lot to the retailers. The MDR charged to the merchants are quite expensive compared to Duit Now QR code. So we can see the volume for Duit Now QR is building up really fast. But like Junaidi shared, because of the mentality of that we have right now, for big volumes we use credit card or debit card, because we are used using card for that type of transaction. But it's slowly moving away from. We might see that maybe in the future the card will be there, but the volume of maybe the transaction count might be not there, because it's already migrated slowly towards Duit Now QR. Because of that's why you can see some banks and including e-wallet players are aggressively promoting this type of payments, and you can see like Grab, Touch and Go, see how they promote their payment channels with their rebates, the Grab with their points. I mean, it's very aggressive. So banks know that they cannot earn much from Duit Now QR. So banks might have the tendency to support cards, because you can see because we earn more from that. I mean, for credit card we earn interchange. We earn
MDR.
Correct. And if let's say your final inquiry, you earn your MDR. If it's on us, obviously you earn more. So obviously you can see a bias. Bank will be biased towards cards, and e-wallet players will be biased towards doing now QR acceptance. So they will compete each other. But in the end, I think the card will still be there in the end.
Yeah, definitely.
They will complement each other, like Tan said. Yeah.
I need to believe in that.
Yeah, me too.
Okay, thank you everybody for the spirited discussions. So I think we're approaching the end of the panel the panel discussions. Now before ending, I just want to throw a statement just for something to consider. So I think it's pretty obvious from the discussions that we're having right now. Smart card applications, smart card itself will actually be pretty relevant still in our everyday life, at least for the next 5 years, right? But having said that, do not forget, we are actually now currently talking about our current generation, which is us. So what about the next generation? What about those coming up? The next second generation the generation after us, or the ones after us. So I think perhaps this is just something food for thought. For the banks to think about the very long-term thing. Even for fintech itself, I think this is a very exciting prospect for you, and also for manufacturers like PNB. Somehow, throughout the 130 years we've been in existence, so we started out from paper. Also now it's slowly going towards the digital. So I think just in closing of this, I think something to consider the possibilities. I believe it's quite exciting for the next and subsequent generations ahead of us. Okay, so with that, we've now come to the final agenda for today, which is the Q&A session. All right. If you have any questions for the speakers, please post them in the Q&A section down below. We'll be addressing them now. And let me take a look also if we have any new questions coming in. Oh, okay. We have quite a few few questions. Right? Okay. Okay. So this is from Husni Abdul Halim. Question for Fazrul. Will e-wallets be preferable than debit cards? If so, why do banks even launch their own wallets?
Normally banks won't launch their wallets, but some banks might have their own reason why they want to launch their own wallet.
Right.
I like to give an example. AffinPay and Maybank Pay, which was launched in, I think AffinPay was launched in 2017, Maybank Pay was launched in, I think 2015 or 2016.
Right.
The wallet was tagged directly to card, but unfortunately the acceptance was relatively quite poor for some reason. I'm not sure why.
Right.
So going back to this question, which is why banks want to launch their own e-wallet. It might be because they are targeting a different segment of customers. Maybe they have their target, what kind of customers that, which is maybe they want to brand the e-wallet for their maybe part of their digital strategy to show off to customers.
Right.
This is our e-wallet.
Right.
They attract them first with the e-wallet, then at the first stage, then maybe later on they will attract them. Apply CASA with us. You can use our mobile bank to make it, because e-wallet may be strictly for purchases and stuff.
Right.
So maybe the bank will entice the customer. Okay, please open up with CASA with us. You are eligible, so you can do this this type of transfer or other purposes as well.
Right.
So maybe the bank might use that for to attract maybe students first. The students first, then they grab that kind of segment, then they will attract the customers to apply there for other banking products.
So this goes back
That's
to
my opinion lah.
This goes back to something to consider for the next generation.
Yeah, correct.
Do you have any?
I see.
Maybe Tang have some.
Okay, my view is, okay, I think there's only one particular bank that's using an e-wallet right now. There's only one. Okay, a bank uses an e-wallet. Yes, it's right. It attracts a totally different segment. And not only that, what you can see everything on the snapshot on the phone. So with banks, right, you have to go surf the net, and not only surf it, just give you minimal information. You still have to go visit the physical bank. So it's totally different segment. And those products and services, some of them are even offered out like wealth management, investment as low as $1. Can you do that over internet, over the web? You can't do that. You walk to the bank, you can't do that. So I think the banks are testing this. This is a new segment, but how am I going to capture it? So a lot of banks, those banks that have a wallet, they tend to work with a lot of fintech startups. They're offering the last mile of capturing them. You know, and they say with a mobile phone, instantly you can see whatever things you have inside here. You know, all the information is compact. You can actually purchase right away. And for young people, young generations, like you said earlier on, it's all about convenience, fast, on the spot. I get it, because that's the world you're in right now. So that's why I say e-wallets are all. It's all about that. They say you need a physical bank. This whole criteria is about digital bank. You don't need a physical bank. So everything is compact into that. So it's totally different target audience. Yeah.
Okay, I have one. Thanks, Mr. Tang, for sharing. Actually, it just so happened that I was also going to ask you this second question from the same person. So the question for you is, if MDEC is working on building the fintech industry, what policy changes are needed at the national level, especially in attracting foreign players?
Okay. Let's start from key stakeholders. Okay, we always look at each key. So let's look at because number one is let's look at central bank and also Bank Negara and also Securities Commission. Of course, MDEC has no regulator.
Right.
We can't change policies, but we can advocate with the industries. Certain policy needs to be changed, but it doesn't mean that we have to change accordingly to what other countries are doing. Because we have to look at our stability, economy stability as well. Because financial plays a big part in our economy stability. So a lot of people come to tell us and say, look, no, London is doing this, that country is doing this, why can't we implement this here? You know, but if you put that particular scene into Malaysia, you have a lot of issues.
Right.
Not with your instability in the economy, so certain things cannot be done.
Right.
So there are certain policies is moving. I can say that both regulators are very progressive. We are moving towards it, but with a very cautious step, which is good because at the end of the day, just remember, it's your money that's in the bank. You know, they're dealing with your money. You know, if anything happens, you'll be screaming.
Correct.
You know, that's one. So from the industry perspective, banks, corporates, it's time to open up. It's time. You see, the fintech startups has already find that, look, we are not here to disrupt, we are here to work together. But banks are saying, yes, let's work together, but the how part is not there yet. So bank has to learn to open up, to adhere more technology.
Is that a policy?
Just to add on to Mr. Tang's opinion, I mean, actually banks are quite, speaking because I work in a bank, I know what kind of ideas are thrown to the management. Yes. But the thing is, whether the management accepts that kind of idea, whether they accept that kind of risk, and they need to look at internal risk and also explaining that to regulators. Some banks are not that comfortable in taking that risk. So the idea is there, but maybe for me, my opinion is maybe the bank should also open their mindset also lah. It's new kind of technologies, and maybe also our regulators should support this kind of initiative that might be the e-wallet players or the banks might propose lah, maybe in the future.
So everyone has to play their part at the end of the day. You know, you cannot just have the regulators open up, but the bank doesn't do it. If regulation is too stringent, it's going to be tough as well. So that's why they have a sandbox there to make sure everything is adhered to.
Sandbox, yep.
Can I just make one statement? There are so many e-wallet now, right? So I think the normalization and when Negara have to somehow or other they have to reach to a point where find maybe the best players or the right players to play. I'm not sure.
My take is it's leave it. I think when they make a good move is leave it to the market force.
Yeah, right.
Okay, make it a market force. So there's no interruption from any parties at all. So like I said, the fittest survive lah, or the one with the thickest cash survive.
I agree with Trump because as you can see, card industry is really heavily regulated by Bank Negara, but is open to all. I mean, it's good. It's a good step by Bank Negara. They allow see how the market plays in the future. Yeah. Then maybe 2 or 3 years we see the fittest who's the fittest will survive.
Yes. Or maybe some consolidation.
Yeah, correct.
Which is already happening right now in certain parts of the world.
Okay.
Okay, thank you very much, Tang Fazrul. Now I have a very interesting question actually. This is from Mr. Muhammad. I apologize if I'm pronouncing it wrongly, but I'll say it as I am familiar. Mr. Muhammad Elsbay, right? So his question, I think, is relevant to Mr. Junaidi, Mr. Hanif. So is the chip shortage real? Right? Is the chip shortage real? Because apparently it's observed that some of the bigger groups have decent stock, while other medium and small size card makers are struggling to find stock, right? And in your opinion, will this chip crisis remain, and for how long?
Ooh. You want to take it up? Or?
Okay. As we aware that this global chip issue is already started, I think, early this year. What happened now that when we place the order, okay, the lead time is about 6 to 1 year now. Okay. The chip wafer maker is still there, but they go to other industries. And why they go interested to other industry? I was told that because the demand is too high. Because during the pandemic, because the demand for the vehicles or the games, and for example, the demand is too high. Then they are focusing on that. Okay. Then when come to the situation, they will impact on the banking sector as well, and also the ID. So yes, it will impact us. Okay, but we have to have the strategy. If we know that will be the 6-month lead time, for example, then we have to work closely with the chip manufacturer, and that how we can have the order earlier, and we can plan on the staggered basis as well. And other things, if for example like banks or our customers, if they can share with us their forecast, okay, their plan for the issuance, then we can work together. Meaning that as a manufacturer, as the bank as our customer, and also the chip manufacturer, if we can work closely, work together, and we plan together, then we share our strategy, then that will happen. I like to share my experience when we first conversion in 2002. The first order that I received from the bank, okay, is only 1 million. The contract is only 1 million. Because of the issue of the clone, then suddenly the demand is increased to 5 million. But I already planned for the 1 million. And the chip is only meant for 1 million. So how I can do for the 5 million during that short period? So what happened that I worked together with all the banks. What happened? Instead of they ask for half million each, can they accept 100K first? Meaning that they still have the cards during that period, and instead of I deliver 500K in one time, but I deliver in staggered basis. And that when we share with this plan with other banks as well, then from there they can manage the expression for their end customers. So meaning that will be so-called the collaboration and the synergy together between the chip manufacturer, the manufacturer, as well as our end customers. So I mean, this is my view on that.
Thanks, Cik Hanif.
I mean, just a very short update. I think Cik Hanif already said most of it. When we talk about chip shortage, it's just bank is one of the major one, which one of the big components. You also have the transit, and you also have the ID cards. So to us, certain segments of the business actually requires slightly longer time to prepare, slightly longer time to manage the specification. So those are the things is still manageable. But those commodity items actually that the banking, we really do have to have a very good planning at our inventory and stock. So those are the one that actually can control our price also, because if not, we're going to get hit by the US dollar, the currencies, and our stock level will be too high. Then then the management will be very, very happy with us. We can't push the items out. But I mean, yeah, it is a real issue. It's a real issue. Whether the big boys or the small boys, well, it hits everybody now. So there's only a handful of players in the market there.
Okay, thank you, Mr. Junaidi. So I think we have time for one more question, one last question before we wrap up this webinar. So I think this is an open question. I think this is from an anonymous attendee. So what it says, certain plastics currently used for cards construction for banking industry is toxic from environmental point of view. Do you see any trends on using other alternative engineering plastics which may not just provide enhanced security features but also increase the longevity of card and making it more sustainable solution?
I'll take out the first portion of it.
Yep.
Well, in our in PNMB, we have a group of team that actually looking into material setup. So our core materials here, we are actually using PVCs, we have PETG, we have polycarbs. These are our three main materials that we actually use in the factory. Again, yes, it is actually plastics, and does actually have some impact in the environment. But again, biodegradable materials is something that we are looking into, and what we're doing now is actually very much into R&D. Now the issue is right now is actually cost, the cost of actually getting the materials, and the cost of the market that actually pushed back to us by the banks, by everybody, saying that you need to get the card at what price, right? So hopefully, right, with the right push from all the markets and also the community, we will be able to push this type of material out, right? If we can push the material out and everybody is willing to take up some kind of the hits in terms of cost, yes, definitely, we can actually go into that. Maybe Shanem want to add some of the...
Yeah, to me, if you look to that angle, that eco-friendly, so-called eco-friendly. But if one bank, for example, or one customer just request for the biodegradable cards, the volume is, you can say is say small. But if we can become a national project, so all the plastic card must be converted and to biodegradable card, bio card. So something is, there is an economy of skills that we can bring this up to the factory level or to the supplier for the raw materials, that it can bring the cost down. So because we have the volume. So to me, if we really want to go for it, then we have to make a project by itself. So this is my opinion on that.
Thanks, Shanem. Mr. Fazrul, maybe you'd like to add something to that?
Okay,
are you willing to pay more? Is
bank back to the bank.
Is bank willing to pay more?
Yeah, I agree with Cik Arif and Cik Junaidi. If this, because most banks are not exploring this because of the main reason is cost. As long as the cost is reasonable for banks, most banks I think will definitely go to the biodegradable card because it's good marketing, it's good publicity for the banks. So as long as the cost is reasonable for the banks, I think most banks will take up that option, and as long as we can pass all the Visa, MasterCard, PayNet certification.
So we'll send you a quotation soon.
Yeah, sure. But you need to enter our RFP first.
No problem. We are all about compliance. Can. Okay then. Let me quickly check. We have 5 minutes. We have 5 minutes more. Okay. I think maybe I have actually one very interesting question did pop up. We have 5 minutes more. I think perhaps I think this is quite interesting for maybe Mr. Tang. I think it's something you could probably give us a quick one. So before we wrap up, right? What's the word? They always call it encore. So this is the encore question, right? Of course, I already said it's the final question. Also encore. Now, government will launch Digital ID Malaysia. How it will change? It's a very big question. How it will change online payment and digital banking solutions? Is the smart card solution still available? It's a very big question, but maybe we can try and wrap it up ASAP. Mr. Tang.
Okay, digital ID is a form of authentication to identifications. So it could be a set of numbers, new numbers.
Yep.
Because normally when people launch digital ID, it's where there's a large population and certain population hasn't been identified yet, or it can be used on certain areas of, refugees and all. It's different sets. But in Malaysia, yes, we might be launching, because I don't know yet, because I've been hearing about the launch of digital ID, but I haven't seen the actual concept, how it works, and is it necessary or not? My question is this necessary? And don't forget, if you launch a new digital ID and there's product services, the people that the banks all have to adhere to is a whole new set of costs for them, whole new set of industries. But the one that's going to be in advantage is, if it's going to be on a plastic card, of course, PNB will have advantage to it. But if it's going to be in a virtual, there's a whole set of securities we have to talk about. So it's a chicken and egg thing. Do we actually need, because you look at the idea of Estonia. Estonia has digital ID, but they have a whole list of governmental services, everything is being listed down there. And it's already there, the framework is already there. And the population is only about 6, it's much smaller than us.
Yeah.
So it's easier to
2 million, I
manage.
think.
The size of the country is smaller and easier to manage. So we have to look at the cost of it, cost benefits, whether is the cost going to be good enough to implement this, and what is going to be the ROIs like in probably 10, 20 years. Is it going to be there? Because technology is evolving so fast, maybe digital ID is not needed anymore. With facial recognitions, 108 points, that could be the next wave then.
True. Okay. Thank you, Mr. Tang, for your quick and concise answer to such a big question. So, we have reached the limit of our time allocation for this webinar. A very big thank you again to our esteemed panel speakers for answering all, I would say most of the questions for today. As mentioned, any unanswered questions will be addressed through your registered email. With that, our session has now come to an end. Friendly reminder, kindly take a moment of your time to fill in the feedback form and send us your business card via WhatsApp, the number you received the event reminder from. You can access the feedback form by scanning the QR code or click the link provided in the chat box. 20 early feedback and business card submissions will get a complimentary GrabFood voucher. We look forward to hearing from you. I'd like to use this opportunity to express my gratitude again to everyone for attending this webinar. I hope everyone can take away useful insights from our 2-hour-long session. Special thanks again to our speakers for your sharings, deep sharings. We look forward to seeing you again at future events. Thank you. Have a great day. Bye.
Thank you. Bye-bye.